to the Let's Talk Crypto podcast, where we discuss the latest Bitcoin, blockchain, and digital asset news.
Hey everybody, hope you're all well. I'm your host, Wes Carlson. This is episode 26 of the Let's Talk Crypto podcast, recorded on Wednesday, the 20th of November, 2019. This is chapter 5 of the Crypto Market Wizard series, a set of interviews with Bitcoin traders, many of whom I've been following for some time. They are all passionate about Bitcoin and trading, and each contribute to the space in their own unique way. Today I have Ugly Old Goat. He is a well-known content creator and outspoken Bitcoin supporter who loves sound money and personal sovereignty. We had a great time chatting. I must say there's a lot that I learned about him that I didn't know before. He has a wealth of experience in legacy markets. He has a wealth of experience in crypto trading, especially Bitcoin, and he's a firm believer in the Bitcoin standard. Now, I must apologize. I haven't done a podcast in a few weeks. I've had some business responsibilities that I've had to deal with. And likewise, I'd like to mention that this podcast has been recorded with me having a blocked nose. So if you find that I'm a bit nasal and sound a bit strange, it's because I have a blocked nose, suffering with some severe hay fever. If you can look past that, I'm sure you'll enjoy this episode. I really did enjoy it. To see the man behind the meme, let's get going. Ugly Old Goat, here we are. Thank you for joining us. It's been a long time planning, so I really appreciate you taking the time to be with us. I know you've been really busy, traveling, holding conferences and everything. So welcome to the show, man. How you been?
I'm doing pretty good now. Yeah, it's been a long time you coming. I know you've asked me to do this for probably months now. And I know I said yes, and then one thing comes up after another thing. It's kind of Bitcoin world, you know how that goes. And then I started having some minor health issues. Of course, we had that conference, and that took my time. Then after that, I had some minor health issues. So I always thought I was in the autumn of my life, but I think it's winter now. The leaves have fallen off, and I'm raking the yard. So that's I just have to adjust to the new reality.
Well, if we're going to relate it to seasons, don't worry. Everything turns a full circle, and you'll be back to spring before you know it.
Well, not in this life.
Sorry to hear about your health, but you all good now? I mean, well, you better?
Yeah, well, I'm not back to where I don't think I'll get back to where I was, but I it's not anything that's, I'll be able to recover 80 or 90% or more. So it wasn't, we were worried I had a stroke or something, but it wasn't.
Okay.
That was good.
All right. Okay. Well, I'm glad to have you on, and I'm glad you're still with us here. What I can say is that you've been very busy, and whether it's been on social media, forming your own channel and podcast and video on YouTube, and then even holding your own conferences.
Yeah, we did that. I mean, really, most of this is new. I'm not very tech savvy, so I have to have people around me to help me. But I really started just writing articles. I kind of got into this thing different than anybody else, and started writing on Medium. And apparently, I enjoyed it, and I found out I could write, and I do have some things to say, particularly to help people on trading. And that's really where I, got going very quickly. Had a pretty good following, about 7,000 or 8,000 on Twitter.
That's right.
And and then we from there, because I've been successful in Bitcoin, I kind of wanted to do new things. And so we built a little studio here. We're kind of new at it. We're not very professional at our YouTube, but I do YouTube. I'm not doing the Twitter. After I did the Medium, I did the Twitter. And then we did a little thing we called the Working Man's Bitcoin Cruise, which was a conference geared by Bitcoin entrepreneurs for Bitcoin entrepreneurs. And it was financially, it was not a success. I mean, I knew that this was going to, particularly our first one is you're not going to make it. But fortunately, I had it priced at such a good rate when Bitcoin was about 4,000 or 5,000 that the people that bought their tickets in advance, I just hodled, and so we did come out okay because the market went up so much. But people stopped buying tickets because the price, I priced it in Bitcoin. So anyway, that's the story of Bitcoin. But it was a highly successful conference simply because it put together a bunch of people, and there's going to be a lot of new things coming out from that. And we're excited about doing it again. I need to. Well, hopefully we'll organize it even better, and we want to keep the price down to get as many entrepreneurs. It's basically, my philosophy is there's only really two kinds of entrepreneurs in the world. There's those with Bitcoin and those without Bitcoin. And those with, and so what we need to do, to me, the next big move in Bitcoin, and I do think we're going to see the largest move in both duration and magnitude on this next coming cycle. I don't think it's going to be driven by banking the unbanked or using Bitcoin as cash. It's going to be entrepreneurs who learn how to use Bitcoin as a standard in their business. And I do make a big distinction between Bitcoin and the Bitcoin standard, because the Bitcoin standard is where the future is. Bitcoin is just the backbone. It's just like on a gold standard. Very little gold was used as cash. The only time it was ever used as cash in a big way was during the California gold rush, when gold was plentiful, and a pound of coffee cost you $2,000 or $3,000 in gold when good gold was $20 an ounce. So you had to get that gold across to get a good price for gold. You had to get it back across the Panama Isthmus of Panama, and nobody was going that way. They were all going from east to west. So that was an anomaly. So, but gold was never used. I mean, people would hoard a few gold coins, but cash was always used, was created by banks, by banknotes, through coinage, which was always had a higher face value than intrinsic value. That's called seigniorage, and that's a legitimate function of government, and how they can have honest revenue.
When you talk about seigniorage, are you saying like just the value of like from the gold to the government produced sort of paperback? I mean, could you explain that a little bit?
Well, seigniorage is the difference between the face value of the coin and the intrinsic value. Right now, you have a negative seigniorage, I think, in the U.S. Pennies, because it costs more than a penny to make a penny because the dollar has been devalued so much.
Okay, that makes sense.
So when I was a child back in the 1950s, I mean, I grew up when all the coinage, the silver, we had silver dimes, silver quarters, silver 50-cent pieces, and silver dollars. When you went to Vegas, you played the slots with silver dollars. And the amount of silver in there, the dollar was tied to a specific weight of gold. So there wasn't as much silver in there as the face value. So the government would issue mint the coinage, and the difference between the face value and the intrinsic value is seigniorage, and that's the profit that the government would make, or income the government would make for providing that service. Because gold was not good cash. It never has been good cash. It's always been a great standard of value, and that's what you really need to understand Bitcoin. You have to understand the difference between Bitcoin, what we have now, and the emerging Bitcoin nation.
But I mean, when you say that, and it becomes
emerging Bitcoin standard. Go ahead. I mean standard.
No. Don't worry, we got that. But when you say that, like, I mean, we're diving straight deep into this now. Like, we were gonna like just go a little bit slowly and carefully, but hell, let's do this. So Bitcoin, right? There's a cost to produce it. They're miners. They're expending electricity, and they've got warehousing costs, whatever it is that goes into producing a Bitcoin. Yeah. And obviously you've got these parabolic booms that happen. So there is seigniorage there, right? I mean, there will be a difference between the cost that they are producing the Bitcoin for and the cost that the Bitcoin's worth, right? Is it comparable? Like can we compare it?
No, I don't think that's really comparable. Well, that's more like talking about the cost of producing gold and actually and the price of gold. That's what you're talking about. That's really not seigniorage. I do think seigniorage will, to a degree, come into play. I'm not sure exactly how. I do think what's more likely to emerge is you're going to see the emergence of banking beyond the exchanges. Right now, the exchanges are acting as Bitcoin banks, and that's unfortunate because it's a very weak form of banking, and we don't really know, how sound they are. But I do think you're going to see more. For example, one of the things that we've just started is I started a website, and I do a newsletter. Incidentally, most of my material is free. 95% of it is free and available. You don't need to subscribe to my newsletter. I don't recommend that you do, unless you have a hodl of at least 5 or 10 Bitcoin. You don't. You need, the first thing you need to do is get that hodl. But what we do is I do try and put out good information, and so we have a referral link. So if somebody, my lifetime members, if somebody signs up and becomes a lifetime member under them, they get a small credit. And you see that all over the place. And so that is a form of credit being created in the marketplace. And you're going to see more and more of that. It's actually merchant banking. And it's a phenomenon you're going to see as more and more people get on the Bitcoin standard. Now, eventually what will happen is that it becomes a banking function, and that's why the gold standard developed. People don't understand that the banks back in the 19th century, they actually developed the concept of self-liquidating commercial paper. And that's a way that you actually create purchasing media out of nothing. But it's non-inflationary, and it's really not out of nothing because it represents all the new goods and services coming in the marketplace. The only money creation, it's represented not just with Bitcoin, but any new product on the market. So if you're producing a widget, and you need to pay your suppliers and your help and all the expenses that go with producing those widgets, a bank would actually create a credit but they would have a lien on those widgets. And so that's what the gold standard was all about. It was a standard to do business on. And that's what I see as happening and going to be happening in the Bitcoin market in the decade ahead.
For that to happen, do you think gold needs to take a back seat, or can they coexist?
Oh, I think they can coexist. I think that's clear. I think that's I'm hopeful, and I think it's so exciting that Bitcoin will actually force the governments to back to sound money and back to a gold standard. And I would love to see Bitcoin and a gold standard compete. Bitcoin has no borders. Gold essentially does. And so
it's physical, right? I mean,
yes, it's physical.
Yeah.
And so a nation state is too. A nation has physical borders.
Yeah.
And so they can't, and I think it would be wonderful. I mean, can you imagine what kind of a world we're going to have in the next generation if we have governments on a gold standard, and yet as sovereign individuals, we can choose our jurisdiction. Now we have governments competing for sound money. Whoa, what a twist that will be, huh?
Yeah, I mean, it'll be turning things upside down.
Yeah, and this is what I think is one of the big mistakes that the current generation has, is we have to get over this idea that we're going to have competing standards. We're not. We're going to have one standard that emerges, and that is the longest chain under proof of work, which is Bitcoin. Now, if you want to be another standard, that's fine, but just show me. I'm from Missouri, so you have to show me. Once you become the longest chain with proof of work, then you're the Bitcoin. But until you do that, I don't want to. I don't want to hear from you. Don't make me all these promises. And I didn't really understand this because I fell for the idea that we needed competing standards. And then I went back and read Hayek and found an old obscure article, and he recognized that no, it's going to be one standard that emerges, and it's going to be that standard that will actually compete with government money. I said, yeah, that makes sense. It's so simple, and yet but we all want to be the standard. We want, no, my money is better than your money, and you know what? Okay, Bitcoin, that is just simply the standard. Okay, maybe it could be there was a better one out there that could have started differently, but you know what? When the gold standard emerged, it wasn't a copper standard, it wasn't a silver standard, and it wasn't a platinum standard.
Exactly. Exactly. But I mean, that's
the gold standard. That's what we agreed on, and so that's what how we conducted this.
But that was free market, right? I mean, free market sort of
the market decided.
Yeah,
yes, the market decided.
The market decided. You can't enforce your will on the market. The market decided gold was the standard, not copper, not silver, nothing else, right? So clearly then, with the last minute conversation, you must be a massive fan of Ethereum.
A what? Well, let me put it this way.
A moment's silence.
Well, no. I'll put it this way. Look, I've been there and done that. I had my little fling in the altcoin, and Ethereum was one. I missed out on the initial offering, but I think I bought it well under $1. I think below the initial offering, and then of course I started educating myself on Bitcoin and the Bitcoin standard, and I listened to Tone Base, and so I sold all my Ethereum, I don't know, very, very cheaply,
no, exactly. So, no, but it was a joke anyway. But in the sense of like the gold, copper, silver standard,
right.
Free market, it's permissionless. You can come up with whatever you want to do, and you have your standard, I have my standard, but the market will determine what is the standard. And if you try and enforce your will on any market, it's not going to listen to you, is it?
Nope, no, it won't. And the safe way is just stay with the Bitcoin standard. I mean, I had my little fling in fact, I did very well last year shorting Bcash and shorting Ethereum, against Bitcoin, and that still has even worked this year fairly well. So,
funny enough, the moment that Arthur Hayes opened up the ability to short Bitcoin, Ethereum against perps on his exchange. I mean, that was a great opportunity, I must say.
No, that was pretty much like shooting fish in a barrel. Not initially. I mean, it ran up very hard. I tried the short side on the way up a couple of times and just got clobbered. But you have to wait for that trend to turn.
Yeah,
so
exactly. So tell me something. I mean, that's all about Bitcoin and everything. You clearly are either an analyst or a trader, and for me, it sounds like you lean more towards you analyze, but you are an actual trader. And I do find there is a difference. Why? Because some people only analyze and don't trade, but you do get analysts who trade, and you do get traders. So,
yes,
where do you fall into this camp?
I'm definitely a trader.
Yeah.
And I teach trading. I think anybody can do it. I think most people don't succeed because their emphasis is entirely wrong. Most people, they want to know where the price is going, and where's the price going to be tomorrow or next week or in a month. And when people ask me that, they say, "Oh, ugly," they say, "Oh, ugly." I've been, I read all your articles, and I really enjoy your work. Where do you think the price is going? And I say, well, you know what? I don't think he really read my articles, because you wouldn't ask me that question, because I really have no idea, no clue where the market is going. And don't even think that's important to know. If you ask me whether I'm long or short, I'll tell you. But I don't think if you need to make a correct trade, then you're probably over trading, because you're not going to be right all the time. So my emphasis is not really on technical; it's really on money management. I think if you master money management, all the rest will fit into place.
Yeah, I can definitely hear that from what you're saying, in a sense that, you know, you've got people, and you could sort of tell if somebody tells you to predict the price, where it's going to be tomorrow, or in a week, or in 10 days, or in 1 year's time. It just shows that they're looking more for an analyst's point of view. A trader works off an edge, you know, and if you've got an edge, you play that, and, you know, that's it. If you ask the person where the price will be tomorrow or the next day, it could be here, it could be there. However, if this happens, then I'll take this position if these targets are hit, or if this trend line's broken, or if that support is broken, or whatever it may be. Whatever their edge may be, they'll play it. And it sounds like that's definitely the way that you lean towards. It is a lot of fun, though, to have sort of a mental masturbation.
Well, here's the edge. I'll absolutely tell anybody that will listen the edge. And again, most people don't succeed at trading, and I find that the reason is they have their priorities wrong. They emphasize technical analysis, which technical analysis has a use, but it's the least important thing. The most important thing is what I said at the beginning, is money management. The second most important thing is fundamentals. And the distant third is the technical analysis. Now, the fundamentals of Bitcoin is that, you know, it has a limited supply. It is easily transferable. It's semi, anonymous. It's private, as long as yes, and as long as you own the keys, it's your Bitcoin. So yeah. That's the whole thing, and the major fundamental isn't even Bitcoin. The fundamental is that we live in a paper fiat world, and that's the fundamental that creates and will continue to create value in Bitcoin. So fundamentally, what does that mean? It means real simple, what a lot of people hear and know about, but few have really been able to do, and that is to hodl. And you have to learn to hodl and have a long-term perspective. And there's so many people that have got into Bitcoin or crypto, and I distinguish myself. I am not in the, do not believe in the crypto market. I'm not part of the crypto world. I'm a Bitcoin standard bearer. It's Bitcoin and Bitcoin alone. And it's the only one that has the fundamentals. It's the only one that you can dollar cost average. And over time, you're going to make out like a gangbuster. And so my emphasis is that if you don't have a hodl, you need to acquire one. And how you do it is up to you. You can jump in with a sizable purchase, and then dollar cost average from there. I believe that if you're not a prudent or wise person, if you don't have at least 5% of your into Bitcoin. I have no problem having 40% into Bitcoin. And at one time when I had nothing, I had 100% into Bitcoin. But that's the fundamentals. And so there's really nothing technical about it except you need a hodl. Now, once you have a hodl, now you can start trading a Bitcoin, but you never want to risk more than about 5% of your hodl. And that's where people make mistakes, because I've known so many people that they bought Bitcoin, but most of them, after they doubled their money or made so much, they got out, or they start trading it and they lose it all. Hey, once you get a hodl, don't lose that hodl. That is your core. that is what you're going to center all your other activities around for the next several generations. And so that's the emphasis that I make. And again, once you get that through your head, I don't think trading successfully isn't that difficult. It just takes a different way of thinking.
I think, very sound points there. As somebody who's been hodling Bitcoin since, let's say, I first got involved in Bitcoin in 2012. I didn't buy or anything, but understood, bought some, sold it, used it, utilized, did not understand Bitcoin as sound money at that stage, unfortunately. Definitely not one of the people who have hundreds or thousands of Bitcoins. In late 2014, or was it 2015, I started buying, like, let's say at $200, $300 around there, and built up a nice hodl position. Literally tried my hand at trading once or twice and was just like, no. That hurts. That really hurts. I will not do that again. And I left that alone until 2018. Okay. So I had a good hodl position. I still do, but a different hodl position. In 2018, I basically spent a lot of time and resources learning how to trade, and I figured out that exactly what you just said, actually, that you can't predict which way it's going to go. Technical analysis is, it's just going to help you maybe on the short time frames. It's about it. On the whole, obviously, I'm a believer in Bitcoin. I understand the fundamentals. So that wasn't something that I need to be convinced on. But where things absolutely cemented in my mind was money management or risk management. And one of the people that actually made me more aware of this was Tyler Jenks, and his approach to Consensio, and then applying that in the different things, different sort of strategies. And it made me realize that you could actually have the wrong strategy, but if you've got good money management principles, you could still come out on top.
Exactly. That's what people don't understand. People think I'm a great super trader. Hey, I'm really not. Now, I mean, I'm very successful, but if you look at my trades, sometimes they're not very smart. But
you don't need the best entry. You don't need to have the superstar entry or exit. But if you get 50% of the move or whatever because you had good principles in place, money management principles in place.
Right. No, it is. And you don't have to be, the way I put it, there's a lot of large traders that become small traders. There's a few small traders. Most small traders remain small traders, but there are a few small traders that become large traders. And the wise large trader becomes a small trader again. You need to, I call it trimming. You need to do, or I don't call it trimming. There was a book written, The Art of Execution. They called it trimming. I'd always done it. I didn't know there was a name for it. But you want to always take some off the table. I have my wife is my partner, and I when in 2017, December, she wanted a Raptor. And so she bought a Raptor, which it didn't cost I don't know, 7 Bitcoin. And she drove for a year and wanted something else. And so she bought that Raptor for 7 Bitcoin and traded it for something else when it essentially got 42 Bitcoin a year later. She literally bought the Raptor when Bitcoin was at 17,000 and sold it when Bitcoin was at 3,500. So, like I say, I made a chart on and buy Lambo here, sell Lambo here, how to trade Lambo. So,
what a pleasure!
More to hodling.
What a pleasure!
I call it. There's 3 aspects to this. There's hodl. Once you have your hodl, okay, then there's what I call saving. And it's a bastardization of the word savvy. It's savvy trading. Basically, hey, you know what? You're hodled. Reward yourself. Buy a new computer. Buy your wife a Raptor. Buy a new house. Buy some. Get something. apart from that you just enjoy. Go on a vacation. Then there's a third thing, and I call that builder. And that doesn't mean that they kind of. I actually picked that up from, I think it was, who was it? The head of the Bitso exchange, Pablo Gonzalez. He gave a great speech, but he talked about building on these altcoins. He said, no, you want to build on the Bitcoin standard. So, that's what we did. I put we bought a house for a Bitcoin house down here. She bought equipment for a factory because she's a designer. And she makes her own. We make our own hats and T-shirts. And then I decided, I'll put 10 Bitcoin into developing a website and tell the people that I've learned. So there's different aspects to it. There's not just the hodling, there's the saving, and then you want other assets apart from Bitcoin to do different things. And that's what the Bitcoin standard is about. You're just learning to do your Bitcoin, but do your business, but your home base, your standard is Bitcoin, and it's just a new way of thinking.
Do you think that if the standard really is Bitcoin, we'll lose volatility?
It'll lose volatility? Yes, eventually I do think it will. But it has to go hand in hand with the development of banking. And of course, it will require at least a huge price rise as far as dollar terms. But I think the stability will come when we learn the old principles of sound commercial banking. My mentor was E.C. Harwood, and he wrote a great article on the lost art of commercial banking. And I see that will be emerging in the decades ahead in Bitcoin. And as that emerges, then yes, the volatility will go down substantially.
Can you help me out here? What are the sound principles of banking as opposed to the banking that we have now? Like just bullet points. Like what are the main things?
Well, it's described traditionally. Maybe people can understand better. It's really known as self-liquidating commercial paper. And basically what it is credit can be established, but new money you can actually create non-inflationary purchasing media so long as the loans that are created, the money created out of nothing, the Bitcoin standard credits created are backed by the new production coming onto the marketplace. That's the difference between the Bitcoin standard and Bitcoin. And that's why I say, I see that the transactions, I think all Bitcoin standard transactions will eventually be free because it'll actually be provided by merchants as a service to their customers. So I don't see this debate on because most people they don't need Lightning. They don't care about Lightning. They just want convenience, and it's going to be the entrepreneurs that can meet that demand that are going to benefit substantially.
But and I mean, that type of Bitcoin standard that you talk about, that would be with commercial banks. I mean, we literally just shooting the breeze here. Yeah.
Okay. Look. Here, to make it simple, let me put this very simply.
Yeah.
If you're a hodler, you're a banker. You just don't know it yet. So you need to start educating yourself.
Mm-hmm.
And you can literally, what do you call that? When you can multiply you can make a multiplier effect of your hodl, because you're on a Bitcoin standard. And that's what I see developing. It's going to start with merchants, and then maybe a more formal type of thing is going to emerge. But that's what I see. And it'll happen off chain. Okay, the gold standard literally happened off chain. The gold was never changing hands, but everything was priced in terms of gold. That's what's going to happen with the Bitcoin standard.
It becomes the standard, and it becomes another layer where everybody transacts in a more convenient layer. Okay, you got Lightning now, but you...
Yeah, I don't know. I'm still waiting to understand Lightning. I mean, I'm strangely silent because I don't know that lightning's necessary yet. Somebody's really got to convince me. I'm not that smart. So you guys, if you can't convince me, show me that lightning's really necessary. And maybe it is. I'm not discounting it. It's just
we are so early that nobody really knows. Let's be honest. But anything's plausible. Lightning's plausible, and a merchant layer that where we have like these more sort of entities that transact and settle back to the Bitcoin layer are also plausible. Who knows? But the key principle here is that Bitcoin is the foundation layer, and that we've got the 21 million Bitcoins, and that's it. There's provable skills.
Exactly. And so that's the whole thing. I mean, and it's the standard. Yeah. And what that means, we don't know yet, except we have the broad outlines. I think if you look at history, we can have an idea. And I think we have to go back and look at the 19th century gold standard first, because that was the most sound money that we ever had for the longest period of time, and most imitates what's going on today with Bitcoin. And I'm looking forward to it. I'd love to see government gold standard compete with Bitcoin. I think that will be so healthy for the world, and just be the foundation for unprecedented wealth and prosperity.
Do you think that after competing that can coexist?
Oh yeah, they will coexist. Yeah, I don't. There was a debate between I think between Seyfried and Amos and Seldon, was it?
Yeah.
And I definitely am on believe. On the side of Seldon.
Schiff, or
I just don't see the governments are still going to have their money, but what Bitcoin is going to do is hopefully bring back competing honest money among governments, and I think that's what I see. And I might be completely wrong, but that's the way I see it. I think that's the way F.A. Hayek saw it, and I don't see the Bitcoin becoming an international. Something that transcends nations. Nations are still going to have their local currencies. It's just that Bitcoin's going to transcend them all. So you want to be a Bitcoin player, you don't have to be, but if you want to be, it's going to be kind of the new internationalism, and that's why we call it the Bitcoin nation. And that's what.
Well, you've got two people on this podcast. You've got no naysayers to what you're saying, so don't worry.
Well, that's because we don't have anybody on it. Okay.
Okay, let's circle back to trading. Tell me something. Because you seem to know a lot about financial systems, a lot about the legacy system. From what I can hear, I mean, who am I to judge? But I've read lots of your articles. That's how I know who you are. Before you even on with Tone or any of those guys, everything, I was reading your stuff way before. And one of the things I'm wondering now is, were you ever a trader or involved in financial system, like a money manager or any in that sense of the word before? What is your experience with this that you've now applying to Bitcoin? Like,
Okay, I'm 70 years old, and as a youngster, I think I was 23 years old. I became a Series 7, first a commodities broker, and then later on a Series 7 securities dealer. So I was a full-fledged broker in primarily commodities, but also, I had the ability to do traditional stocks and options and stuff like that. So yeah, I was actually.
What does that mean, though? What does that mean? Sorry,
I was weaned on the markets of 1973, which is probably the closest thing to Bitcoin, because it was a highly inflationary time. The commodity markets would go. We have limits in it. Sometimes they'd go limit up for 5 or 10 days, and you couldn't trade. It'd just do one move straight up or down, much like Bitcoin is today. I was also a self-taught student in economics. I was, of course, read Henry Hazlitt, and my mentor was E.C. Harwood from the American Institute of Economic Research.
Wow.
And I became very much a believer in gold, and I actually started minting gold coins. And I started a company that was called Gold Standard Corporation. And at the time, it was a lot. Okay. I was actually in a private money experiment, one of the early on when, before all this other stuff. I mean, I can't believe where we are today. Back in 1978, 79, when I got into the private money business, we were just such a small minority. We were crazy. We were just absolutely out to lunch.
You were at the fringe.
And we were definitely the fringe, right? And, but I made some gold coins, and I was the first one. And my competitor was the South African government back then. You're from South Africa, so you're it. And they actually came out with a coin called the Baby Rand. At the same time, I decided to decimalize the troy ounce. I came out with a half ounce.
Wait a minute, was that before the Kruger Rand?
Yes, I was before the Kruger Rand, half ounce and
what?
I was doing that. They imitated me. I actually had somebody from the South. I can't remember the name of the company. But they had a government-owned corporate, and I lived in the Midwest, and they actually flew out to see me, and they wanted to buy me out. And I should have done it. I would have avoided maybe 11 years in prison. But at any rate, so I became and then I did silver coins. I minted. I minted probably close to a million coins, and then I started taking deposits, and then I was terrible. I mismanaged the business, and then my marriage fell apart, and I was running my business for a year and a half from jail, and then it collapsed, and then I got a big old mess. And long story short, I did 11 years in various prisons, and so these guys, I understand. I had no intention of hurting anyone, yet I did. I mean, the reality is I did. There was no intent there, and I wasn't running off with funds and living the high life. I just lost it in the marketplace. I mean, that was flat out. Right, because I got behind and then tried to play catch up. So I guess I learned it from a life experience, and that's why I'm not. While I'm not a part of the crypto world and I dissociate myself from it, I also, understand what's going on in some of the. Now, I do think there's a lot of people that are out there that are scammers and are exit scamming, but I think a lot of.
Let's be honest though, and I hate to interrupt you. Let's be honest though. There's a lot of companies, banks, and big corporations that are guilty for exactly the same thing, or even far worse. And when I say far worse, by orders of magnitude. So you did what you did.
But the difference is they raised enough money. I was an easy target, and if you're well financed, you're not, because that's the difference. But I do believe there are other people that have gotten into created these things, and they really had good intentions. They thought they were doing the right thing, and a lot of them have woken up and said, "No, this was wrong." But so we kind of have to, keep our hearts and minds open for those kind of people. But yeah, I mean, I probably at the time I should have just, said, I probably would have had people that would have even bailed me out, but I was just too proud, and I didn't ever want to declare bankruptcy or reorganize or anything like that, and just things kept snowballing and getting worse. But at the time, I was doing all kinds of things. I was writing articles then, and I wrote one on. I reviewed Murray Rothbard wrote a book, called The Case for 100% Gold Dollar, and I called him a gold socialist because he wanted to impose a gold standard on everybody. I get a letter from Milton Friedman, and he says, "Oh, I read your article, and that's." Here's what I've written about gold and pseudo gold standards. In the same way, I mean, I had F.A. Hayek and all these people contacting me on what I was doing.
That's insane.
So it was insane.
But how did you feel? I mean, like being somebody who was having those type of people writing to you, how did you feel when Saifuddin Ammous released his Bitcoin Standard book? Like reading that and understanding his foundation of Austrian economics.
Yeah, well, I thought it was great, and that's why we honored him last year with the Bitcoin. He was the first Bitcoin standard bearer. I think that book has set the intellectual standard for what Bitcoin is all about. And that doesn't mean that I agree with him 100%. We have our own differences, but that is a tremendous book, and it's a great foundational book, and it's the place where we begin the debate. And where we go from here. Well, Saifuddin, he doesn't know, and I don't know. But he's just given us a lot of good stuff to talk about, and that was what the wonderful thing about that debate that he and Seljan. I can't remember Seljan's first name, but anyway, it was a very good debate, and I took the minority on that because I think I lean towards Seljan's view on that and not Saifuddin's. But we'll wait and see what the market tells us. That's the ultimate decision.
That's it. You can't impose your will on the market, right?
But my surprise was just when I got out of when I found Bitcoin, I couldn't believe how strong a big following that sound money in Austrian economics had. I would have never imagined that the market would have gone this far. I got into Bitcoin in 2013 when I'd heard about it. I heard when it first went over $1, but I didn't really look into it. And then I saw it, and immediately I said, I saw it for what it was and couldn't, buy enough fast enough. And so, that's.
Well, I think there's a common thread there. I think most people when the penny does drop, not purely just, there is a speculation aspect to it, but not purely speculation. Once you've realized that it is pretty, how would you say, like sound money, it is, it's not as big a risk as the sort of mainstream media and everybody else portrays it to be. You've checked it out for yourself, and like anybody else, like you'd go dig a little bit deeper and, sort of tick off all the boxes and make sure it's as low risk as possible. I think that most people will start accumulating, and I mean on spots. I don't mean accumulating and starting to buy like and trade on futures or anything like that, but literally going to buy more Bitcoin, whether it's a little bit at a time or whatever you can afford, dollar cost averaging, as you call it.
Right. Yeah. On one of my articles, my flagship article, I just go, how the average Joe can profit like a professional trader in Bitcoin, and you can literally go back and start buying Bitcoin at its peaks. And the first peak was in 2014, where it's $1,000. And if you dollar cost average, and you put in $1,000 a month from now until you'd be worth well over $1 million. And even if you started at the last peak of 2017 and started dollar cost averaging when it was at 20,000, you're well ahead of the game today. And it's just amazing how that works. And there's actually a service out there, that you can plug in all the results of dollar cost averaging. So like I say, the number one message that I have, if you don't own any Bitcoin, you need to go out and get a hodl and start accumulating it. And once you have a hodl and you want to learn how to trade it, then I can help you. I do. What we've done is I started on Medium, and then I started actually trading and in a small way and publishing my results on the Medium. And then I decided to start a newsletter or a website, and actually I opened an account with 2 Bitcoin on February 4th of this year.
I remember this.
Yeah, and subscriptions. And we're at 35 Bitcoin right now, so not too bad. And
wow.
And we probably, the people on the newsletter get the actual trades after the fact. I don't make any predictions. I don't tell you, you find out because I can change. And are you a subscriber? Are you getting our newsletter?
I'm not a subscriber. I read all your free content, but I do remember you. I'll give you an example. I remember one of the trades that we did, which was simultaneous and coincidental, was the breaking of 6,000. back in 2018. And afterwards, right, we had a few trades. And then what happened was you posted a Medium article and you spoke about how a big trader is very easily becomes a small trader. And it hits us, and it hits a spot with me because basically what happened to me was I was convinced, naive as I am, at the time. I've got a little bit more battle scars now. But at the time, I was 100% convinced that we were going to break that 6K. Now, as a trader, you should never be 100% convinced of anything. It should be a matter of probabilities, and you should sort of be taking positions. If this happens, that happens, right? But I was 100% convinced, right? I took that trade, and I made a lot of money, right? Okay, so I got lucky that time, okay? Good. It broke my way that time. It should have broken that way. It should is the bad word because nothing should do anything that you wanted to do. But if you get what I'm saying, it was a high probability that formation, what has been going on, should go that way. But in my mind, it wasn't should. It was 100%. So I took it. I made a lot of money. But shortly after that, I read an article from you, and it sort of opined that you had done something similar, and that now it was time to go on holiday. You were going on holiday because you're not going to overtrade, and you're not going to go and turn the winnings back to 10% of what you originally. Do you hear what I'm saying?
Oh, so yeah.
I can't remember the exact content, but it hit a spot with me, and then I didn't listen. So I went and traded, and then I gave back 50% of what I made.
Yeah,
remembered what you had said, and I stopped, and then I didn't lose that afterwards. So basically, you hit a spot there with me, and I realized, and after talking to people afterwards, and obviously following and everything. No, I haven't subscribed yet or anything, but I'm not one of those type of people who subscribes to anything.
I emphasize. The charts are objective. Okay, that's what the market's doing, and that's got really nothing to do with you. The only thing that you should really trade is your own equity. And that's really hard for people to understand. They say, what do you mean you don't trade the chart? I said, if I exit, it's because of the change of my equity. If I'm getting out, if I see the equity spiking up, I'm going to trim. I'm going to reduce my position, take some home. Okay. And if I see yourself. Pay yourself. And you don't want to see these huge equity swings. And there's a way that you measure it. First of all, I'm never net short Bitcoin because I always have my HODL. But I will go short, speculative short, and hedge a portion of my HODL. And that's a wise and prudent thing to do. And there are things that you can do. For example, on that move to 6,000, Tone was on it all along, convinced it was going to go down. The problem that we had is that we had a backwardization in the market. So we had about 6 or 7 times it went down there. And I said, you know what, this thing's not going to break. And I was always buying it, at 6,000, but it never really rallied. I never could get a position going. And so I was just breaking even all year. But then back there in October, we went into a contango, and then they had that weird split with Craig Wright and Roger Ver, and then I saw the writing on the wall. I went short the Bcash and went short Bitcoin, and then I said, whatever you do, don't buy the break under 6,000 this time. And so we went from 6 to 5,500, and I sold some more at 5,500, doubled down, and we then we went back into backwardization in December, and I said, hey, it's time to cover your shorts, and this market's probably bottom. I never thought it would break 3,000, and it didn't. And and so you get long again. Now you ride it out.
One of the best descriptions I ever heard of contango and backwardization was from you. Would you mind just explaining what that means in terms of spot, future, what it means and what the purpose is, if you can.
Okay. Well, I'm very familiar with it because I was an old-time trader. I was in the gold and silver market in a big way. I would actually make and take delivery. I know how futures work, and futures are created. They're not created for the speculator. They're actually created for commercial users to pass on risk. And so the speculator provides a very useful function because they are assuming that risk for the commercial users. Now, what happens is in gold, gold is always in a contango, except I think rarely, once or twice, it's gone into backwardization. But it's a reflection of the interest rate and storage costs of gold. Your contango on silver is higher because the storage costs are higher. It takes more space.
Okay.
And what happens is if a market is in a backwardization, that means that the futures are lower than the spot. Now, Bitcoin was a very immature and infant market, and way back there in 2016, in December of 16 and January of 17, February of 17, we were in this huge backwardization on the Chinese markets. And I figured, the Chinese don't understand how this works, but the futures were $200 to $400 under spot. And I said, that's bullish. And people would look at that, that means Bitcoin's going down in the future because the futures are under that. I said, no, it's bullish because it fundamentally creates a demand on those futures. Because
why?
Because people are gonna sell the spot and buy the futures because they can lock in the difference. And the market
difference. Yeah. Got you.
In other words, what you're playing is that spread, and if you're a hedger, that's all you're really doing. That's all you're really doing when you're trading Bitcoin and when you're on the Bitcoin standard. So basically, I was extremely bullish back then, and of course that was the bottom. That's when we were under $1,000, and
absolutely.
People just didn't understand that concept. And I think the Chinese really didn't get it. But those that are familiar with markets knew that this was the case. And it was a lousy timing mechanism. It was fundamentally the market was going to go up, but man, it took a long time for it to finally realize it. So it's not really a good timing mechanism. Now, Bitcoin's matured as a market, and I think it is now, contango and basis is turning into a timing mechanism that you need to be looking at. And
is that just because of maturity, or
I think it's because of maturity? Because there's more users and they understand what's going on, and you're not going to see that big backwardization.
Liquidity? Because of more liquidity, or because of
more
users?
Liquidity and more people are understanding how markets really work. It's a fundamental. It's a fundamental situation, and so that's why that's what made me so bullish back there in December, January, and February. And then if you look at the market, of course, we had there are really very few technical situations. I think the biggest technical situation was the April 1st breakout when we actually broke out through it was a daily high. We went through weekly, monthly, and quarterly breakout, which was just a huge, and the market.
It was phenomenal. It was phenomenal.
Yeah, it was a phenomenal move. Yeah. And then we continued that bull market until we went into June, when we went up to 11,000 and we shot up to I don't know, 13 to 15,000.
14, nearly 14.
Okay, and what happened was the market went into a sharp contango. Well, now you have a huge. This was so healthy for Bitcoin because the sharp miners could sell just a small 10-20% of their production for December delivery and lock in. They can't lose now for the year. The market goes down to even 2,000. They're locked in. They've got a profit because not only did the market go up fourfold, but it was trading at hundreds of dollars
at a premium
over
massive premium. Yeah.
Right.
Massive premium. I remember it was like $200-300 premium.
Was buying. Right. And so anybody, the market was fluctuating, but you were paying such a premium. It was really a bad bet to be buying Bitcoin at all back then. Well, and so, and guess what happened? Then we finally broke, and we broke down to between 82 and 7,800. We went back into backwardization, and we had little spikes where it did that too. And every time it went into backwardization, it would correct itself within a matter of hours or less than a day. And then we went down there and it kind of stayed there for a while, but that happened between 78 and 8,200. So in my mind, that corrected the market, that we now switched from weak hands to strong hands, from weak speculators to strong speculators and strong commercial interests. And then we had that last little break when I was at Valley, where we went down to 7,400, went into backwardization again. I got stopped out and immediately said, oh, I got to get right. I went right back into it. And then we had, of course, we had a 39% move in less than 24 hours. Well, that's what's going to be, that's giving you a peek to the future, people. Now, I'm not saying
it's a deviation,
It's a huge thing. And we did, and so, we're having
Do you think that,
go ahead.
Sorry to interrupt you, man.
No, that's fine.
Do you think that not the bottoms in terms of the 3K, do you think the bottoms in locally, like as in where we're sitting now?
I'm very.
This is mental again,
normally
mental masturbation.
I like to say, don't ask me where the market's going, but I'll tell you whether I'm long or short. And the people that follow me, I do measure a trend with the 2-week high and 2-week low, but it's really, you can't measure it because a lot of times it reverses there or it continues a trend. In this case, I do think we hit some new lows this last week, and I'm just kind of ignoring. Show me I'm wrong, but I'm long, and the market's going to have to go down to take me out. Look, I wrote an article. One of my last articles was on this Beckett, and I was very skeptical. And I kind of wrote, is it really deliverable, or is it Hotel California? And you know what? If my analysis of Beckett is correct, it's huge. It's a huge bullish thing because it is truly a deliverable contract. It's different from anything else that I've seen. And what it is.
In what sense?
Okay, well, let me explain it with gold. For example, when I took delivery of gold or silver, I would have a certificate, and it would be in any one of a number of vaults. It could be Republican National Bank, it could be Chase, it could be Iron Mountain Depository. Okay, and then if I wanted the gold or the silver, I would literally have to. I couldn't appear personally. Maybe I could be, but you hire another go-between like Brinks to go pick up your gold and silver and then deliver it where you want it. This is what Beckett is about. They've created a certificate that's secure, but that's really not Bitcoin because it is confiscatable. It's if the United States government
it's derivative. Sure.
Derivative. So the real question is, how can I get that? How do I deliver my Bitcoin from my private address, turn it into a Beckett certificate? Okay. And then how do I get, if I have a Beckett certificate, how do I get it out and send it to my private address? And that question.
Do they do that?
And well, here's how apparently it's done. And I didn't do the research, but one of my followers did and sent me the information. Apparently, the way it's going to be done, it's going to be done through the Futures Commission merchant. And one of the brokers that's really working on it and wants to develop this niche is Interactive Brokers. So I have a retirement account that I'm going to probably open up an account with them and try and find out more. But if that is true, it's extremely bullish. It's even more bullish.
That's huge.
Well, it's more bullish than even having the
ETF.
ETF. It's more bullish than that, and because it's more bullish because on an ETF you can never take delivery. This one you can, and you can limit the risk. In other words, as a large hodler, you would never put too much in those certificates. You know, they're more vulnerable than those that are on your private wallet. But the fact that if through interactive brokers, let's say I can make delivery, with 3 days before the delivery date, have 72 hours to get it to them, or get it out within 7. That's just like anything else. That's like because I actually took delivery once, or made delivery once, of live feeder cattle. And it's can you imagine doing delivery of something that's alive? You got to feed and water them every day. So there's actually a go-between to make that transition. And then on the article, I also put down the old, this will be a genuine test between a sound money, deflationary money, and the US dollar. And if the market can survive it, and if we can survive defaults. Because Bitcoin, with that delivery feature, the bucket could very easily go into default. But if the one market, the bucket's experienced enough, it may be the one market that is relatively safe compared to everyone else and can pull this off. Because it's going to be... because they're experienced in what they're doing, and that's why I say when I wrote the original article, I said I don't want to say any more because these people aren't stupid. They spent $148 million developing this platform, and I can't imagine that they didn't know that, hey, this thing has to be able to be delivered into private keys. You can't do it directly with Backit. You do it through the futures commission merchant. And so it's the futures commission merchant that you're doing business with that is actually you're going to be dealing with. They're the ones that are going to take that Bitcoin out of the Backit certificate and send it to you. And that's one of the services that they're going to provide. That's my understanding. That's my understanding. Now, that's my understanding is they're working on it. It's coming, but it's not there yet. But when it comes, and if that comes, when that day comes,
fully agree.
It's the same as an ETF, only even
physically
better.
Settled. Exactly, just better. No, I agree. If that is what it is, as you say, we've only got what we've got to look at. If it is what it is.
They're working, I mean, there's a lot of smart people working on this. And I think they had to set it up this way to get it through the regulatory agencies, which is great, that they were smart enough. So I understand what's going on. I understand why they can't really talk about it yet, because it's all being worked out. It's not an easy thing to do.
Okay, so we've got mainstream legacy markets, which you have experience with. You've dealt in gold markets, silver, and you've got like CBOE doing their futures. You've got BACT, you've got this. Did you see that? I think it's CME, I think, is going to be releasing options exchange. What does this mean for these rogue cowboy crypto exchanges that are out there?
I'm not sure. And I would say that I don't think very much of Coinbase, and I'll probably be writing about that in the future. I don't think much of the exchanges in general. I mean, Kraken might be a step up, but their platform's so bad, or has been so bad. To me, I used to trade on the other exchanges and do all kinds of arbitrage, and that's a good way to be trading if you know how to do it. But to me, the greatest advance in the marketplace was actually created by Arthur Hayes, and I really take my hat off to him because I understand.
I fully agree with you,
and I understand what he's done. And guys, it's incredible. Look, I used to be in the commodity futures market, and I had margin calls that I would have to sell assets that you could lose more than your account. And I don't think you understand his socializing the losses the way he has, and his invention of the perpetual swap. It's just a very ingenious way of trading. And I also respect him for the innovation has come about not because of regulation, but because he's specifically avoided it. Yeah, we've had some really bad. I've been victim. I've lost on some. Who was it? Big Jim or Big Butt down there in Florida. I lost a lot there. I lost everything on another exchange. I got my 30% haircut on Bitfinex. So I've been through all that, but none of those problems have happened on Bitfinex. And in fact, when they actually make good when there is some anomaly that is their fault. It's going to be real hard. I think that I see no reason, and the fact that I understand why they closed down. I mean, I'm a U.S. citizen, so I can't even trade there. My wife is Mexican.
Yeah, sure.
I understand what they're doing. They don't want the U.S. in their business, and so they can't have any inkling that.
Yeah, why would they want? Yeah, I mean,
right.
You know why they don't want that. I mean, it's quite obvious. And quite frankly,
right now they make, hey, we do our best to keep anybody that's U.S. out. I know, like Tone built up a big affiliate code with them, and it gets all gone because. Hey, you're a U.S. citizen. We can't do business with you. I get it. I get it. But you know what?
No one can blame them.
The problem. Don't blame BitMEX. Go to your congressman and blame them. That's what the fault is.
Yeah, exactly. Look, I think they're the ones who opened up the door to Bitcoin derivatives or crypto derivatives. But I mean, more so Bitcoin than anyone else.
Oh, they have all the one. If you look, BitMEX, but every other exchange is a dwarf compared to BitMEX.
You know this. You know that there are institutions trading on BitMEX that would not be able to trade anywhere else. They don't have a deep enough market, deep enough liquidity.
Yep. No. By far. I mean, it's a very. He deserves all the wealth that he's really created a great service, and I have a very, very high regard for that organization and for him in particular. And a lot of people disagree with me, but show me otherwise, guys. I'm sorry. I've seen it in other markets, and I just, like I say. His way of paying just once a day, very sound way of not getting hacked. And, the fact that it's only in Bitcoin, so he avoids all these jurisdictions, and that's exactly what the market needs. Now, back it's going to be $1. It's a $1 on and off ramp. That's the whole thing, and the dollars were much more.
But that's my problem.
Right, and it solves that problem, but you're going to be KYC and AML.
Yeah.
The government's going to know what you're doing there. And okay, so, you play it's you're playing. Honest businessmen should have no problem with that, except we don't have an honest government, and so you're somewhat exposed. So you only put a portion of your hodl in bucket certificates, and if the proportion gets too high, you get them off of there. And so the market is going to decide how big bucket's going to get. And that's going to be the whole key. And can they survive? I mean, I in my last newsletter, go look at the potato default by Simplot. I don't know if you know who Simplot is, but he's the guy that started, frozen French fries, and he supplies McDonald's. And he basically owns the Idaho potato market, or a good chunk of it. But the potato market that was being traded back in 1976 was Maine potatoes. And that's what the delivery called for. So there was a default on the exchange. And, I had a customer that he thought he was going to make a fortune, and he wound up, I'll never trade again, because the exchange actually it went into default. This is a very real possibility in Bitcoin. And that's why you want to limit your exposure on Backit, but it's going to be the true test of what Bitcoin is about and what the dollar is about.
Yeah.
And if it goes, if they go into default, it's going to expose the dollar. So everything is going to have to be working to not ever let the Bitcoin Backit exchange go into default, and that's going to be a challenge. But I think the American markets are up for that because they're sophisticated enough to know how to do it. And these are futures contracts. Remember that too.
Yeah.
So it's not like Arthur Hayes. If
you can
trading
hedge.
on margin,
You can hedge.
you can lose more than what you have there. You can lose your entire fortune because it's not a derivative. It is futures, and if you get caught, you can get caught in a real big way. And I've seen that happen time and time again. I mean, I remember back in the 1970s, there was a newsletter that was called Inflation Survival Letter, and they showed, you can make 20% on your interest. Every year in and year out, you just put it in the Mexican peso. Well, that was great until they devalued, and so people were buying the futures on Mexican because it always go back to the the government peg rate until it didn't, and then the guy just lost everything. And the same thing happened in the Swiss franc.
It's limitless. You can lose more than you put in.
Yeah, it's limitless. You can lose more than you put in, which is a
people
whole
that understand
that. That's they don't get it. They don't understand the service that Arthur Hayes has provided them. They really don't get it because they've never experienced it.
Exactly. Well, man, it's been awesome, and we're coming towards the end here. There's so many questions I had lined up for you, but I'm just going to just summarize into one or two. Because you are a true Bitcoin person to speak to, combined with somebody who's got such a wealth of experience in the legacy markets and with trading, whether it be fundamental, technical, just sort of a holistic view on things. What little piece of advice, if you could summarize to one or two things, would you give to some of these crack traders they've just discovered Bitcoin and they've just discovered they can plug it into an exchange and they can double it or triple it or whatever? Go
to Medium and read my articles on Medium. We also have some of them on the website, uglyoldgoat.com. I need to give you a referral code. I'll just put you on the comp list and have Eddie send that to you, because what you need to do, people can get on there if they want to subscribe to the newsletter. Then
absolutely, of course we'll do that.
But I do offer discounts to people that sign up through a referral. So I will send you a referral code if they want to. If they're interested in the newsletter, they can get a 15% discount. It's like a tenth of a Bitcoin, which would be 0.085, and then but you don't need it. If you don't have a HODL, you don't need my newsletter. You're not ready to trade yet, and once you do that, once you do subscribe, you have access to all the past newsletters. But basically, all the trading information that you need to be successful is on Medium or on the website. And the number one thing is, if you don't have a HODL. If you do have a HODL and you want to trade, don't risk more than 5% of it. And if you lose that, cut back on your trading. Let's say you have let's just make it 100 Bitcoin HODL, which, that's a lot, but I'm going to make it so it's easier to think. If you lose 5 Bitcoin, you don't trade 5 Bitcoin anymore. You maybe trade 4. You cut down. In other words, it's really hard for people to do because they take a loss and they want to increase their trading. No, you take a loss, you decrease. Look, I have turned, it's possible to do and maintain. Last year, I traded all year I traded water all year because I never caught a position until that last move. I caught the last move, and from 6,500 down to 3,500. That was the only move I caught. I've been profitable every year. That one move made me profitable. This year, I started with just 2 Bitcoin, and we've run it up now to I think 36 Bitcoin. Well, how much is in my account? I only have like 4 Bitcoin in there, 4 or 5 Bitcoin in there. I'm not trading with 30 Bitcoin. I've taken it out. I've put it in other things. You HODL some,
and you've paid yourself,
and you save. Pay yourself and then invest in new things. And that's what this Bitcoin standard is all about. It's going to be people that have ideas. We're going to be investing our ideas in Bitcoin, and that's what I'm working on. I'm an old guy, but I got my hands on a whole lot of projects, and with a lot of youngsters here that are excited about Bitcoin. This is where it's at. This is the new frontier.
Bitcoin is where it's at. It's not trading, it's Bitcoin.
It is where it's at. It definitely is.
Yeah.
And it's a lot of fun once you get going on it. The people, once you get on it, my belief is we're going to be the trendsetters. We're going to be developed. There's going to be new moral values that emerge because of Bitcoin. It's just amazing, where we're going to go with it. So if you're not on board, get on board and get that hodl.
I'll leave you on this thought for this podcast. Yeah. Today, where I am is Wednesday, the 13th of November, 2019. Okay. Tomorrow will be the 14th of November. Okay. Naturally. When 6K broke, it was exactly 1 year ago tomorrow. We are received.
Wow. Okay.
Wow. We are actually at a very indecisive point if you look at price action. Where to from here? Because we don't predict price, but just for fun and mental masturbation, you and I are going to think about.
I am long. Yes, I'm long. I am long. I have no problem being long. No, I don't. I'd be very surprised if we can break this market from here. But if they do, show me, guys. If you, I'm well financed. I'm a strong hodler right in here, and I have my reasons. I like to say there's a bunch of technical reasons, but this Backet thing it's in the background, man, and it's going to explode. If they make that thing truly deliverable to private keys, it's the same as an ETF.
Yeah.
Only better.
Only better. Awesome. Thank you so much. Where can we find you? Give us your Twitter handle, your Medium, whatever it is that you want to shill us. Let's get
Medium is Medium is Ugly Old Goat. I have a website, uglyoldgoat.com. And then I have Twitter. I'm Ugly Old Goat 1, the number 1. So
got it.
That's Twitter.
It's been an absolute blast talking to somebody, an old school Bitcoiner.
Yes, the fundamentals is not Bitcoin. The fundamentals is we have lousy money out there. And so that's why it's going to go to Bitcoin. Real simple.
Absolutely, man. Ugly Old Goat, thank you so much.
Okay, well, we're glad we did it. We'll do it again.